Joining me on the stage is Abi Ajayi, and I'm going to give him a chance to do a quick background on himself, but the most important thing you need to know about Abi is that Abi is a bridge. When most people hear about his role as head of primary markets at the London Stock Exchange, specifically focused on the Middle East and Africa, they think IPO, and most times in most people's minds, IPO is often a destination. Whenever people say exit, they think IPO as well, right? Yeah, I see a couple of nods. But the unique thing about Abi is that Abi is a bridge, he is not a destination. And that's one of my favorite things about him. He helps companies, or he ensures that companies can use London as a financing destination. And I love that you take pride in Africa. I remember in the last panel session, Honorable Sanjeev and Honorable Mark Simmons and Sanjeev were talking about how you can make a difference. If you need living proof that you can make a difference in your role, that is Abi. And we're going to be speaking about that today. No pressure. Yeah, so we're going to be talking about that today, and we're going to be talking about how he has made a difference in his role, how he has looked from a vantage point to assess what it looks like to be and explore and invest in a startup at an early stage level, but also what it looks like to watch those startups get to the point where they can exit or list on global exchanges and all the things in between. So if you're a VC, if you're a founder, if you're a policymaker, this is definitely for you. So I think I'm going to be starting with the question on everyone's lips, which is, what does a real pathway to exit look like? I know that I said you're not a destination, but I'm curious to know, or rather, let's maybe set the scene. What is your story? How did you come to be this cheerleader for Africa in your role? Does it make you uncomfortable when I call you a cheerleader for Africa?
Well, I thank you very much, Blessing, and good morning to distinguished guests. I'm really delighted to be here this morning, of course, sharing my experiences, and hopefully that people can learn from some of the things that we're doing. I probably say, I fell into banking. So I read computer science for my undergraduate degree. I did a master's in information systems. Of course, probably I was saying someone that I'm an itinerant citizen, so I lived in Lagos, the US, South Africa, and I spent the most good part of my life here in London. Mm. And so in falling into banking, one thing is sort of being constant in all of this is that I've always been sort of emotive about the continent. So my passion has led me into sort of focusing on connecting capital with ideas on the continent and ensuring that that capital goes to disciplined companies as much as possible and ensuring that those companies are thinking about impact.
Yeah.
Worked for Bank of America before sort of joining London Stock Exchange, and in that role, in very simple terms, essentially, I help companies to look at London as a financing destination. But when I say help companies just looking at London as a financing destination, I'm also sort of quite focused on ensuring that those companies recognize that there is also the need for domestic capital aggregation. So I do this in terms of win-win, so build partnerships with domestic exchanges. And someone said something, I think it was the dean earlier, saying 10%, right?
Yeah.
And I'm going to use the 10% because on the London Stock Exchange, my CEO says that we're a 300-year-old fintech, right? And being a 300-year-old fintech means, of course, we also sort of helping to mobilize capital into markets. I'm very proud to say there are 110 odd African companies on the exchange, which is nearly 10% of the listed companies on the exchange, about $200 billion of market cap. And adding to that, it's not just a relationship that started yesterday. We welcomed our first African company nearly 100 years ago, and that company is still listed on the LSE until today. We partner across a number of exchanges, building fungibility and connectivity, ensuring that you can stay local and go global with London. I think that's also something I'm very focused on because then you need the talent to stay, you need the infrastructure to ensure that your partners, employees, and co can actually participate in your in your growth, be able to sort of buy the stocks in your company, because I personally believe that the capital markets is one of the surest way to grow wealth and to preserve economies. So in that light, so that's essentially what I do, and in terms of ensuring that we have the diversity on our exchange. There's 22 plus countries represented on our exchange. And over the last 10 years, corporates as well as African governments have raised in excess of $150 billion on the London Stock Exchange, of course, in terms of using our markets. But that usage also ensures that that capital goes back to London. And then so when you tell me what am I seeing in terms of the bridge, I think we're taking the same strategy, because as an exchange, we think that it's important for you to be thinking about the entire funding continuum, so the entire barrel. And in the last year, we've decided that we're going to be agnostic to whether a company is private or public, because we recognize that some companies want to stay private for longer and they don't need to list. And I'll be honest, I'm going to probably tell you 5 home truths. The first one I'm going to tell you is today, please count.
I'm counting. Number 1.
IPOs are not for everyone.
Yeah.
That's the first one. And so keep the count. And for those who want to do it, I'll probably tell you that, you know what, it's perhaps the most rewarding thing and most difficult thing you'll ever do. But at the same time, when you do get it done, you create what is massive democratization of capital, but you also create an inspirational story that will drive additional companies to move from entrepreneurship driven, from survival into purpose. So that's one. 2, in that strategy, in terms of recognizing that, you know what, companies want to stay private for longer, we launched what is called the private securities market, where companies who want to attract diverse capital, they want to clean up their cap tables, can stay private, but still use London's public market infrastructure. So on that side, we're welcoming a number of private companies with a specific criteria, without you necessarily becoming listed. So you're on that platform, you can sell down on an intermittent basis, you don't remain listed, and then you can continue doing what you're doing.
Is this linked to the 80/50 index?
Well, in part, because that's also one of the ways in which 80/50 contributes to that pipeline. Because we are also an international exchange, I'll say, maybe a lot of people don't know this, about 36% of the companies that are listed on our exchange are international. And whilst I heard Sanjeev say, like, you know what, local capital finance, and I think, you know what, when local capital is
Wait, no, don't talk about that yet.
Okay.
I have a specific time that I need you to talk about that.
Okay.
But I loved when you talked about stories, and Sanjeev also spoke about stories, and I've been in so many conversations with you where you've talked about how important narrative and storytelling is, especially for African businesses. I want you to demystify that. Like, yes, narratives are important, and we hear that all the time. But from your perspective, what makes a good story for a founder? And so that the VCs in the room can also hear that and start to coach their founders before those founders get to you. What makes a good story? What makes a company interesting to you?
Okay, so it comes to the second thing.
Yeah.
You're a founder. Please don't solve useless problems. Don't innovate around a useless problem. You're on the continent. I mean, I'll tell you, I met a set of founders in Cairo called Breadfast, right? They started from selling bread. Now they're in payments. They have a coffee shop.
Really?
They just raised a pre-Series C round for $50 million. And do you know how it started? They're second-time founders. They were sitting around the table and thinking, okay, what do we want to do? We're entrepreneurs. We want to solve a basic problem. I don't know how many Egyptians we have in the room today. Okay. So, you know, bread is very, very important. It's a key staple, right? And so they sat around the table and started thinking, oh, well, look, what can we do? And they continued sort of brainstorming around the table. And whilst they were at the table, someone brought bread. So why don't we sell bread? So they started by delivering bread very early to households in Cairo. And so in terms of delivering that bread, making sure that people, what did they do? They added technology to that delivery service. So you go online, you order the bread, and they deliver it to you very early. So in that process, they were geo-mapping households, understanding discretionary consumer disposable incomes, and they started adding products to it. So expanding expanding the product line, and then all of a sudden adding labels to it, adding technology, understanding where exactly. So now, last year they did revenues in excess of $400 million. And I'm only quoting because I can't make the conversion in EGP. And that business is growing. So that's a simple one. Money Point. Everyone knows that.
Our sponsor as well.
Again, it was about solving a basic and fundamental problem. In terms of where it started from is how do you do the reconciliation of banks so it doesn't wait overnight?
Yeah.
Very simple problem. But then they focused on it and they're deepening into it. And then writing the stories, and the narrative is very strong. Cumulus, out of Tunisia, says, look, we're in desert, very close to the desert. How do we create water out of air? They've created a technology that allows you put the machine outside and it generates clean, drinkable water. Yeah. But in this solution, whilst it solves a local problem, can travel and should travel. Right? Those narratives that we're seeing, I see a lot of those examples. I mean, people will tell you today that, look, we need to move capital, and Africans need to finance Africa. Tony Elumelu usually says Africa capitalism. Yes, it's great, and I think it's a really, really good thesis. But in that token, you need that capital to be able to travel to other markets from. So how do we get more African companies being able to create a currency rail so that a Tunisian can send money to Lagos without necessarily thinking about dollars, or a South African can send money to Kenya using the currency rails and infrastructure that Africans have built. And if they think about it, there's 1.4 billion people, and people say, look, it's going to grow to become what? There's a number that was thrown around that by 2050, 1 in 3 or 1 in 2 people in the world will be African. Then there's that consideration. So whilst we have the democratic dividends, we should also be thinking about demographic dissonance. So we need to create more employments for Africans. I think that's also quite important.
I really love how you said that. And if I'm going to summarize that really quickly, it would be that we should tell stories that can travel as we build products that can travel.
Yes, and so in that traveling, I should also say that it's very important that you protect your IP.
Okay.
Right? Protect your IP, because even if the solutions or what you've created locally does not scale, that IP can travel and would have global usage. So important that you think about it. And so start thinking that, once you build a product or you build a solution, get a really good lawyer. Make sure that lawyer helps you package that IP so that your rights under the IP are permanent, persistent, and unalienable. Must be in the agreement when you decide to actually package it.
So in making IPs work for African companies, we've said a couple of things that I've heard you say repeatedly about local global relationship, and I know you like to call it global.
Yes.
Yeah, so the global relationship is really important, and I know you've talked extensively about this, where it's like you need to build local validation first. What does that look like? What does local validation look like?
So I think between 2021, 2022, and 2023, when people we had I think 2021 was when we had the cash exuberance and everyone's raising money in and doing that. And someone who was building a business in Uganda has 500,000, says, I want to scale. I want to go to Nigeria to scale. Like, why? First, you need to be a gorilla in your main market before you send out monkeys. Right? There's no point, so think, again, you're building and also think in local currency. Must first focus on building a fundamentally great business, regardless of currency. If the business is great, regardless whether it's in Tanzanian shillings, Kenyan shillings, build the best business possible first in your main market. Ensure that quality is your superpower. That your customers will continue to support you, so that the minute you decide that you want to raise capital, because your customers are your first protocol and they're good, they would support you and back you. That's the first instance. Right? I'll say that. Secondly, when you start to think about, once you build a really big gorilla in that main market, then you start thinking about, okay, how do you start to think about scaling? Unfortunately, and I think we should speak about that some of the markets where businesses are growing don't have deep capital markets. Yeah. And so on the functions of what people talk about capital markets, you can't have capital markets without capital. So we need to talk about capital aggregation at some point in time during this conversation. So when you do think and when you build a real business, one of the things that I think I take pride in is the fact that I'm helping African companies use London as a financing destination. And I go in whichever country I'm sitting in, I'm saying the first port of call you need to look at first is to get that domestic validation by tapping your local capital markets. And we, as London Stock Exchange, and I say we because I'm very much African first, is that we want to make sure that we are not taking national champions away from their markets. So we've created what you call the international secondary listing segment, allowing national champions to stay on their local market and actually be able to also list in London. So that local relationship, I think, perhaps, if you let me say, it's perhaps one of the sexiest things which you have. You have dual optionality because then your local investors are backing you, your employees who don't have the infrastructure, or even your partners who don't have the infrastructure and invest in international markets can support you in the local market. And then, of course, when I often say this, that, you know what, you solve the twin problems of return, which is return off and return on capital. So an international investor who wants to buy an African company does not really know, who is confident that, of course, the returns are great because this is high growth and is having a return, but I want to buy it on an international exchange where, you know what, I'm not going to be too worried about return off. When I want to buy it, I can sell it in London, right? So that's that thing. And also, what also that does is that with comfort and with a bit of time, that international investor can migrate from the international exchange because there's an opportunity for arbitrage and also go local. And so that relationship works quite well.
I think this might present an opportunity for the VCs in the room because I know one of the biggest questions VCs have to answer by the time you're raising your second, third fund is where the exit's happening, what's happening with the exits on the continent. And bringing that into the capital market structure that you've talked about, it almost feels like not every single country in Africa has the capital infrastructure to be able to support the local development that you're talking about, and maybe Sanjeev might disagree with me. Oh no, he's nodding, he agrees with me. So my thought is if you were a consultant hired by any African government to say, what do you think we should prioritize? How should we build the rails to improve our capital infrastructure? What would your advice be? Okay, so I would my goal is that we're speaking to future presidents in the room. So yes.
I would think about it as I think there are three pillars. First one is creating the access. So for creating the access and the infrastructure for that to take place as the first layer of the cake. So first, anyone who needs it must be able to get it, right? That's the access. And second pillar will be around collection. So collection means that where do you get the capital pool to stay in so that you know what you're creating SME infrastructure or platforms for capital to actually to actually be collected. But that capital, of course, will require some sort of incentive structure. In most markets where you want to aggregate capital, you need to create incentives for that capital to be collected. Say, for example, in the UK, most of you probably know what you call EIS and SEIS schemes. That's an infrastructure allowing for financing of for startups and scale-ups to get access to financing. And it's individuals like yourselves and companies that can put, so if you put up to £250,000 into an investment, you get a 50% tax right back. You need to create that incentive. So that's that way, without the government nudging, loads of people, and I'm sure a number of people have, I use it a lot, right? Take advantage of that SES. In most markets on the continent, we don't see that. I think there's a need to actually have the direct linkage between thriving SMEs in the market and the resultant economic effect. Most countries, whether knowing or unknowing, do not account for the fact that SMEs actually are between 40 to 60% of the GDP in most markets. So if you don't drive the financing into, or you don't drive the capital into this SMEs, so to speak, you are, on the other hand, sort of crippling those economies. So that's the second bit. Then the third bit, which is actually quite important, is around consequence, right? If government creates infrastructure for companies and SMEs to be able to you collect that money today on Monday, you're a founder, and you collect money on Monday, and then you buy a G-Wagon on Tuesday. That process of accountability needs to be there to make sure that, you know what, you take tax proceeds or tax-backed proceeds, you must be accountable and ensure that, you know what, the consequence management system is there. So those are the three things for me, I think, in terms of, so it's access, collection, as well as consequence management.
I love those three things that you've said, but then I also want to point to something. But as we do that, I hope we have a mic. We would like to take maybe 2 questions from the audience in the middle of this conversation. So if you have a question, please raise your hand. Someone is going to come close to you. Okay. I need one more woman. Okay, 1, 2, 3. Please, can the mic just hang around close to them? 1, 2, 3. We can start with the lady. And then while we wait, quick question.
Okay.
I've been in a conversation with billionaires on the continent, and some of them do not, of course, this is not a representation of all, but I was in a very specific conversation where one said, I don't understand how the VC model works. Why would I invest in VC when I can invest in real estate? Or I could do something else, or I could just put my money with the financial manager who would help me turn a profit in foreign currency. We know we need more local capital, but then does that look different? Do you see it differently from your perspective? As Sanjeev said, local capital is coming, but how can we increase that? A lot of VCs want LPs, PEs want LPs, but we want local currency. If the founder is thinking in local currency, maybe the reason currently they probably might not be thinking in local currency is because they're not getting funding in local currency. So how can we change that? Is there something from your vantage point that you've noticed that we need to be able to say more to our billionaires to be able to convince them to invest?
No, I think there's an absence of incentive structure, right?
Okay.
Capital has only one religion, it's return. I don't care, you can say it as you like. So if you can create and demonstrate, because then, I mean, most of you here are not here because of charity. You're here because you want to make money, you want to make returns on that money, or on the time that you're spending here. So yes, whilst people will want to put capital to work because, yes, they made a lot and they want to drive impact. Yeah. In real terms, mostly the capital is looking for a return. And you need to create an incentive structure for the billionaires and the family office in the first instance to support venture, particularly as if it's in a nascent economy. There are markets, for example, like Japan, where, of course, on account of the 2008 crisis or so, most of the non-financial institutions are holding nearly $1 trillion in excess capital. In fact, when you look at it across that industry, nearly about 59% of the GDP of Japan is held in cash and related by non-financial institutions because the memory muscle issue. Government is now creating incentives for those institutions to put that capital towards venture and towards investments in whatever shape or form. Maybe for every dollar you put in here, you get 2 cents back in tax. Yes, that needs to come. And without that, I'm not sure.
What is your incentive? I know you're an angel investor. What is your personal incentive for investing in Africa?
Oh, no. So, of course, the first thing is I do think, first thing, I believe, that's one. 2, I'm passionate. I'm very driven to put in knowledge and capital to work on the continent. And then 4, as an investment thesis, I want to back minority founders. So that's my incentive.
I love that.
And so I'm not putting all of my savings, if you let me. So I'm finding creative structures to put money in a way. So I take advantage of EIS and SEI schemes in certain instances. So for every 1,000, maybe I'm putting $10 to work. So.
Okay. Wait, my people that are asking questions, just one request. Your name, and then the question, so that we can get everyone's questions. Deal? Everyone, hold them accountable. Okay.
Hello, my name is Jihan Sharif. I'm sorry, I'm going to take you back to when you say do not work on useless problems.
Yes.
So what is a useless problem for you? For example, that we could have different definitions. For example, if you take like a Western perspective or an African perspective, or even within Africa, the definition of a useless problem might differ. So what are the components a problem needs to have to be not useless for you?
Love that. Okay, we're going to take the second and the third question. I remind you, don't worry.
Hi, everyone. My name is Uwe. I'm head of investment at Launch Africa, which is one of Africa's most active VC firms. Hi, AB. Nice to hear you speak again. We all know that the DFI era is fading, right? It also means that more private capital is going to come on board. But capital follows trust. I'd like you to touch on governance. A big part of from my experience investing on the continent is that governance aspect is not something we're so used to, and this is not it's not necessarily a culture problem. It's that people don't know things around financial reporting, stacking your board, and all that. I'd like you to just briefly touch on that and how we can improve on that as we go on investing on the continent.
Thank you. Last question over there. Thank you all for keeping your questions on point.
My name's Tim. I'm a governance professional, actually. So, like, you stole my,
Perfect.
you stole my thunder on that. So, like, what specific sort of interventions, enhancements that you'd like to see in internal audit and controls that African companies should adopt to attract Series A, B, C, and successive funding to lead to a possible exit? Okay. And I suppose a corollary to that, in terms of useless problems, we've got some pretty fundamental, big chunk stuff to look at. So. X billion people, we need housing. So that's an infrastructure, mega project kind of scenario. So in terms of capital aggregation, how would we facilitate something like that?
Thank you so much. Looks like you were looking at my notes because governance was our last question. But please go ahead. Let's start with the useless problem.
Okay. So let me, again, I'll probably say this one. So problem is useless, or something is useless when it doesn't have mass application, right? You've raised money, and I don't want to be specific. I'll say you're sitting in Africa, right? There are fundamental problems around access to financing, access to good food, staple food, challenges around logistics, education, and then all of a sudden you're sitting down and saying, like, I'd call this a useless problem. I want to see how AI can transform governance in Africa. That for me is a useless problem. Because there are basic things that you can actually fix, right? I want to see how AI can transform governance. That's a useless problem, spending a lot of time. There's so much solutions that you can create in and around, but then of course, some of these things will come as a consequence of you actually having a critical solution. So that is an example, and that's an example for me.
I think if I could even add to that, it would be, and they talk about this, Thomas Hellman is here, he's an entrepreneurship professor. Thomas, please wave. He's over there, yes. They talk a lot about product market fit, and you could almost see that if your product doesn't have a use to someone, then like, not someone, but like enough people, then what exactly are you building? Like it's a hobby. Because how then don't raise money. And again, we talk about different types of financing. Don't raise money from venture capitalists. Don't look on the exit path. Just fund your business.
So to be clear, does not mean that AI cannot solve governance.
No,
I just say for Africa, I think it's a useless problem, right? Yeah.
No, of course. And it could also just be that there are things you could fix and deal with that could eventually solve the governance issue, but then just concentrating on the AI feels like you're doing a surface level problem and it wouldn't sink down. But yeah, let's move on to the DFI era, touching on governance, how to reinforce that, how do we get companies to do their governance better?
So I think since Sanjeev was speaking earlier, was speaking about sort of how do you create win-win. So in sort of the work that I do, I sort of partner with local domestic exchanges around starting early in terms of on the ecosystem building. speaking to founders, speaking to VCs, so that they can educate their companies around what does good look like, right? How do you transition from founder mode into business mode? Some businesses start out of survival, right? So how do you transition to so like those businesses move from survival into purpose? That means putting that structure in place, showing them examples, demonstrating the narrative, and showing, of course, people start to recognize that, you know what, at some point in time, you must separate competence from ownership. Because you own it doesn't mean you need to run it. And how do you show them the importance of public markets in helping you understand that the public markets do not need a board seat in order to trust you to invest in you, but you need to create the pillars that will give them comfort. So I say to VCs to select your portfolio company at least once a year or once a year, get them to attend a session on IPO readiness. Not because you want them to do an IPO, but of course that IPO readiness will then start to understand. Okay, when you get to this stage, you must be able to explain how $1 comes into your business and how it lives. How do you understand where the amber, red, and green lights show in and around your business? But then that in itself is not the business itself that they need to focus on, but it starts to bring it into their consciousness going forward.
I've also heard you say that the time to start to interact with an exchange is not at the point that you want to IPO. It's way before. So build that relationship, build that network, build the muscle, and you build that muscle by engaging.
So that was the third thing I was going to say, that, you know what, if you're thinking about an IPO in 10 years, the time to start preparing is now, right?
Yeah.
Now meaning, again, starting to understand what is your equity story, because it will change. Because then you don't buy a business for what it was, it's what it will be. Ensuring that, you know what, you start to get yourself into that cadence of saying this year you're going to make, or this quarter you're going to make $9. And you don't make 8.7 and explain that, oh, this is what, you make 9.2. Then next quarter you say you make 10, you make 10.1. Get into the cadence of under-promising and over-delivering. Because there are two rules when you're doing an IPO. Two rules once you become a public company that you must never break. Don't miss your numbers, and don't miss your numbers. Those are the two rules.
Are those two different numbers?
Oh, same numbers, right? You just need to remember it twice. Right.
Okay. I think we answered the controls problem, right? The controls question, because it was tied to the governance one, so we're good. All right, so I'm going to ask you two last questions. We at Said believe very much in impact, and we talk about impact from within.
Yep.
How many impact-led businesses have you seen IPO? And what do you think impact-led businesses can do to be able to stand a chance?
Okay, I think I said something, one of the three things. I said three, there should be two more than I should say. So
yeah.
I said IPO is not for everyone.
Yes.
Okay, and the reason why IPO markets exist is because in order to support strategic or financial sales, right? And so in terms of, and I'll probably say, maybe how do you classify it? I would probably call it, is Copa an impact business? Would you call that an impact business? I suppose.
Depends,
right?
and that's such an MBA.
Because I think you can make money. You can make money while doing good. You can make good money while doing good, and I think you'll start to see those sort of companies come in. I think they're doing what they're doing in terms of creating that access, financial access. I think that's great. So there's a company called Sun King, which is, do you call that an impact business? I don't know. But they're definitely on the path to IPOs, and so we'll probably see that from Africa. They're likely ones that would IPO pretty soon.
Okay. I'm going to let us close off with, because I don't want us to leave here without having actionable steps. So what are actionable steps you think founders, investors, and ecosystem players can take today that they can start to implement?
So you're a founder or you're a VC, and I don't know how many people are in the room. I think the other thing I should say is that VC money is not, fourth thing I was going to say, VC money is not long-term money, right? The surest place to get long-term money is through public markets. And when, as a VC, when you invest in a company on Monday, I think it's important that on Tuesday morning, after your investment, you sit down and say, how am I going to get my money back on Wednesday? So that even though you have a plan to take the money on Sunday, I think it's important that that alignment of objectives is established on day one. So helping the companies to think through what the exit pathways would be, like, you're going to think about partial sell down. How frequently do you need to do that? Not all companies need to IPO or can IPO. Can you use platforms like the private securities market, which the London Stock Exchange has just launched, where private companies on an intermittent basis can raise capital just through sell downs to help VCs to recycle capital? I think that's important. Without necessarily going public, can you use that? Because I think secondaries are becoming a thing. That's one. Two, as a founder, as I say, protect your IP, very much so. Make sure that that is wrapped up. Become a gorilla in your main market before you send out monkeys. I think that's one thing that I will keep sort of saying. Also, the other thing which is also quite important is start early engagement as a VC, as a founder. Early engagement with public market investors, just to introduce yourself, because when you do decide to come in, if you see yourself as a zebra, right, it's very important that you continue to communicate that zebra story. So when you're ready to go for public market outing, they don't see you as an antelope, right? But because of the early engagement, the way you come in, the story is the same and consistent. So when you come in and say you're a zebra, and they say, yes, this is really a zebra. Oftentimes, people are thinking about IPO a little too late. By the time they're coming in, people already see them as antelopes, and they'll never see them as a zebra.
Thank you so much. I hope this was an impactful session for you. Thank you.